Hello everyone, welcome to Bitcoin Not Crypto. My name is Forrest Stevens. In today's video, I'm going to be talking about Berkshire Hathaway and why they don't need Bitcoin, and talking about basically their history and their potential future with Warren Buffett. And before I do that, I want to tell you about Bitcoin Well, which is where I buy all of my Bitcoin. They have the lowest spreads for a non-custodial exchange in Canada and the United States. And a non-custodial exchange means they send your Bitcoin directly to you when you send them money. They never hold your coins for you, so you cut out that counterparty risk. And they have non-KYC options. There's also a Lightning address. If you're the first to scan this, you'll get those free sats. And if you sign up with my code below, you'll actually get some free Bitcoin as well. So check them out, link in the description. So the reason I say that Berkshire Hathaway does not need Bitcoin is that is not part of their investing ethos. Their investing strategy is to pick out value, find value, to find companies that operate well without additional guidance. They're not activist investors. They buy percentages in companies that they just feel will continue to operate and provide income. And they try to buy these companies at good valuations based on their intrinsic value. So based on their future free cash flow, their properties they own, intellectual property and not, their moats, their brand, whatever. Trying to look at Bitcoin like that is very difficult because Bitcoin's an emerging technology. It's not a company, it's a protocol. It's like investing in HTTPS. It's like investing in the internet itself. And it is a technology that takes a lot of understanding. Part of Berkshire Hathaway's philosophy as well is not to invest in something that they don't understand, something that is outside of their wheelhouse. So in 2016, it seemed like a bit of a leap for them to invest in Apple. But what I think people didn't realize was Apple at that time was already a mature company. They were not an innovator. They were just increasing the technology and quality of their existing products and expanding the moats and services they have, but they're not an innovative company at this point. And in 2016, I would argue that they weren't an innovative company then either. Here are some products that came out in 2016 at the same time that Berkshire Hathaway bought them. The iPhone 7, the iPhone 7 Plus, the Apple Watch Series 2, the MacBook Pro, and iPad Pro. These are still the exact same products that they release now. And I remember back in 2016 when the iPhone 7 came out, that was the first time that people were showing me their iPhones and saying, look at the pictures it takes. And I think this was probably when portrait mode was basically created and it made the background blurry, and people were saying, I don't even need a DSLR anymore. I have a DSLR. I have a Sony a6500. I don't even use it anymore. I just use my iPhone 7. And this was like a shift in the quality of cameras in phones, in my opinion. And since then, nothing amazing has really changed. I mean, sure, if you compare an iPhone 7 to an iPhone 69 or whatever they have coming out this year, they'll look a little bit different. They'll be a higher quality, of course, but really it's not mind-blowing. Apple is not an innovative company anymore. They scrapped their iCar, they scrapped their iGoggles. They just continue to extract value from the users they have, the users they'll gain from services, from subscriptions, from the walled garden that they've created. And that is the kind of company that Warren Buffett and Berkshire Hathaway buys. They buy toll booth companies. They buy companies that can extract value, that have maybe low overhead, high cash flow, comparatively, not tech stuff they don't understand. And the thing is too, is the shareholders of Berkshire Hathaway, that's what they want as well. They don't want the newest tech companies in their portfolio, in basically the ETF that is Berkshire Hathaway. I mean, Berkshire Hathaway is not structured like an ETF, but you could think of it as like almost like ARK, right? Like ARK is ran by Kathy Woods and the team there, and they have an investing ethos to invest in certain types of companies. That's the same thing as what you're investing in Berkshire Hathaway. Of course, the companies are much different. They're value-based companies, and they're buying them for intrinsic value. So another reason that Berkshire Hathaway does not need Bitcoin is because they are incredibly privileged. When they announce a buy of a new company, that company's stock price skyrockets. They immediately make a paper return on their investment because of the weight of the influence that Berkshire Hathaway and Warren Buffett have because of their track record. And we're going to take a quick look at the chart here of their track record. This red and green line here is Berkshire Hathaway. This red one, or this whatever magenta one, is SPY, S&P 500. You can see over this time period, this only goes back to 2014, but this is pre-Apple buy. Berkshire Hathaway is up 267%. SPY is up 221%. Congrats. You've beaten SPY by 40%. I'm sure your shareholders are happy about that, but they don't understand that SPY is beating inflation by what, 2, 3, 4, 5% some years. And that's monetary debasement and pricing power of dollars. So yeah, I mean, you're beating your benchmark. I said this, in the conversation I had with Satoshi Guapamoto, Gen Z Bitcoin. The benchmark should no longer be S&P 500. We have a new standard. The financial system should be on the Bitcoin standard, not on the Bitcoin standard as in relation to the gold standard, but that is the standard benchmark that you should be competing against. Can you outperform a 60% CAGR? And Berkshire Hathaway absolutely cannot. And that's fine. Their investors are fine with that. I think in the future, they'll realize that that isn't fine anymore. But right now, they are fine. And that's, in one sentence I'm saying, Berkshire Hathaway doesn't need Bitcoin. In another sentence, I'm saying Berkshire Hathaway does need Bitcoin. And that is because every company needs Bitcoin because of the reduction of erosion of purchasing power and holding a better sound treasury reserve asset. The only companies I invest in have a Bitcoin standard. The only companies I invest in use their free cash to buy Bitcoin. They do not buy treasury bonds. Berkshire Hathaway sits on a staggering amount of money, of cash, of US dollars, and they hold short-term and different duration treasury bonds that they earn an interest on. They use that interest to probably buy more treasury bonds or occasionally buy purchases of companies. Now, I want to get into another reason here why Berkshire Hathaway does not necessarily need Bitcoin, and that's another part of their privilege is that we can look back at the deal they made with Bank of America. Bank of America was struggling, and they were looking for help. And when a company is struggling, that means they're cut up a little bit. And there's that saying, you want to buy when there's blood in the streets. Bank of America was hemorrhaging some blood, and Berkshire Hathaway said, you know what, we can do basically a big deal before you go raise money somewhere else or find other investors. I'll just do a massive deal with you. And for doing that, I want it at a specific price that is maybe lower than the market value. And this is because we will help you by lending our name to your credibility as a bank. This did wonders for Bank of America, and that has been a long-term hold for Berkshire Hathaway, even though it's an underperformer, basically. And it's been a long-term hold, and it's been good for them because they bought it at such a low price. And you get a lot of value from something, even if it isn't incredibly valuable, if you buy it for less than its value, right? And that's what Berkshire Hathaway can do. Another way they're privileged, These massive investors, they need to release these filings of what they invest in. Berkshire Hathaway has such an effect on stocks that they were exempt from releasing that they were buying a company. I can't remember the exact company now, but this is relatively recently they did this. And that allowed them to buy more shares over a longer period of time without having to do these big smash buys or buying into the increased retail and institutional frenzy that happens when Berkshire Hathaway announces a new position. But let's also be clear here that Berkshire Hathaway makes a lot of bad investments. They make a lot of investments that underperform the S&P. They make investments in things like Paramount. They do arbitrage plays like Activision, and they underperform. And basically, that's going to happen with any investor, really. And they're going to have a few things overperform their benchmark, which is the S&P 500. And the thing that overperformed was that tech play, was Apple. And yes, I said Apple was a mature company, but they're less mature than, Occidental Petroleum or See's Candy or Coca-Cola, right? They're less mature than these very mature companies that were just paying off dividends because they had nothing else to increase their share price and increase their value to shareholders. So yes, there's a scale of maturity, and Apple is a mature company now. I wouldn't be surprised, they start paying out dividends. They have so much cash. They have so few R&D projects that are wielding anything of value to shareholders. The eye goggles were a total disaster. Of course, they wasted a ton of money on R&D for the iCar. And don't even get me started on the iCarly. This is just a company that, in my opinion, has seen its best days. Yes, it will probably continue to outperform the S&P 500, but have you looked at some of the companies in the S&P 500? They are just absolute zombie companies that are propped up on cheap debt and overconsumption based on people spending because you might as well spend money now because the money's going to go down in the future. They're locked in through regulation and through structures that basically enforce people to use their products. Like, there's a lot of trash in the S&P 500. There's a lot of trash in the S&P 500. An even better benchmark would be the QQQ because it's less companies, so there's less trash in there. They're more tech focused. They've outperformed the S&P 500, but still there's a ton of zombie companies in there as well. These benchmarks are bad. The only reason Berkshire Hathaway continues to outperform and do okay is because their investor base, the other investments that people have that buy Berkshire Hathaway are bonds. They're maybe REITs. They're maybe covered call ETFs. They're S&P 500. They're retired. The people that buy Berkshire Hathaway at this point are not looking for long-term value creation. They're looking for value preservation with a slight edge over the other things that are just value preservation for them. Bonds, basically. They're probably retired. This is probably just part of their retirement. Of course, there's institutions out there and exceptions as well, but this company is not going to adopt Bitcoin because they didn't buy Apple 10 years, 20 years before they bought it. They didn't buy Microsoft. They didn't buy Amazon. They didn't buy Nvidia. They buy these value companies that are, in all my eyes, not that valuable because none of them hold Bitcoin. Now, should they buy Bitcoin? Of course they should buy Bitcoin. It would help them outperform. They have so much cash. Even if they just did a percentage of that cash, right? They would gain, a little bit less money on interest because Bitcoin's not an interest-bearing instrument compared to the debt that they hold. Yeah, sure. But it would outperform, of course, any bonds. Bonds are, anybody buying bonds, they're the suckers at the table. That's well known at this point. Should they buy Bitcoin? Of course. Will they? No, because it wasn't even Warren Buffett that bought Apple, that spearheaded the Apple buy. It was someone else within the organization. And of course, now he endorses it, and now he thinks it's a great company, the best business in the world, he said in the past, and that is because it's outperformed anything else that he's ever bought. And that's great. I mean, good for them, good for the Berkshire Hathaway shareholders if they think their returns have been good. That's awesome. I mean, yes, he's a legendary investor because he has had, if you compound his gains over time, and he's been in the game the longest, and he's been consistent the longest. That's awesome. There's been countless other investors that have outperformed in shorter periods of time. You know, I've outperformed Berkshire Hathaway this year. Does that make me better than, you know, Warren Buffett as an investor? No. Do I know something he doesn't know? Yes, because I understand Bitcoin deeply, and I am a Bitcoin holder. Yes, they should buy Bitcoin. Will they? No, unfortunately. But that doesn't mean that you don't have to buy Bitcoin. And you can do so with Bitcoin Well, which is a sponsor of this show. And if there's anything else you'd like to hear from me about this topic, about Berkshire Hathaway, Warren Buffett, anything like that, if you have any questions from this video, comment them in the comment section on YouTube. And I look forward to reading those, replying to them, and even making a video based on them possibly. Thanks, everybody, and we'll see you on the next one.